Kia ora, everyone, and welcome to another CarbonCurious Ask Me Anything webinar. Today, we are going to be talking about the latest on pricing, emissions returns, and trends in the carbon market. There we go. Oh, too much. Okay. My name is Rowan Sprague. I'm a carbon forestry specialist here at CarbonCrop. So I help with determining eligibility for carbon credits and also advising our account managers as well. And with us today, we have our special guest, Cathy Lawless, who is a senior commodity markets analyst at emsTradepoint. She's based in Queenstown, and some of you may have met her when you were setting up your emsTradepoint account, if you were doing that. Welcome, Cathy. Okay, so today, if you have any questions throughout this webinar, drop them in the Q&A section. So that will be a little button at the bottom of your Zoom screen. So you can click on that and just type your question in there, and we'll get to it in our Q&A session towards the end of this. Before I hand over to Cathy, I thought I'd just give a quick introduction to CarbonCrop and who we are. So at CarbonCrop, together with landowners, we are on a mission to pull 1 billion tons of carbon dioxide out of the atmosphere and lock it up in trees. And we specialize in native forests. So just as an example, in the ETS of all of the forests that are registered, only 17% are native forests. But for us at CarbonCrop, over 80% of the forests that we register are native. And we also are really good at it. So this is data from MPI. This is from 2017 to 2022. These are the approval rates of native forests registering into the ETS. So the industry average of everyone else is 24%, but for us at CarbonCrop, it's 81%. So we're really good at identifying eligible native forests for the ETS. And a bit about how CarbonCrop works. So we will help landowners all the way from the initial stages of a free land assessment, then to registering forests in the ETS, and then once you're registered, ongoing compliance and reporting, as well as helping you earn credits and helping you sell your credits. And on that note, I guess about selling credits, I'll hand over to Cathy to talk a bit about what's going on in the carbon market.
Perfect. Thanks so much, Rowan. So yeah, I'm Cathy Lawless, and I've been working for emsTradepoint now for about 4 years. So I was part of creating the carbon trading platform for emsTradepoint. So I've been part of it right from the start. So what I thought I would do for everyone today is basically show you just one slide. And on that slide, we're going to have a, what you can see in front of you is basically a timeline. So that's a timeline of prices and a timeline of events that have been happening basically on different dates that have had an impact on the prices. Now, as you can see from this slide, we've only done the last year. Now, prior to this last year, the emissions trading scheme in New Zealand didn't have an auction. It was basically set up a way where there was a fixed price option where any emitters would essentially just pay a fixed price to the government for every ton of carbon emissions they were producing every year. Now, the auction process began in 2022, and since then we've seen really big changes in pricing. Now, this graph doesn't show it. We can see here that it starts at just above the $75 mark. But between March 2021 and March 2022, we actually saw prices of NZUs go from just shy of $48 to just shy of $79. So that was an immense jump caused by the introduction of the auction. Now, the main reason that this has happened, that the government went ahead with the auction process, was to try and make the New Zealand emissions trading scheme kind of up to date and in line with other international trading schemes, such as the trading scheme that they have in Europe. Now, what happens is in the emissions trading scheme is that they now have what we call a cost containment reserve. Now, this cost containment reserve essentially acts as a really strong guide for prices. And for 2022, the government set this cost containment reserve at $70. Now, what happens when the auction reaches $70 in this case is it releases more units into the auction. Now, this has a really, really strong indication, and we saw that $70 mark be surpassed towards the middle of 2022. Now we can see at the start of this this graph, April 22, we're already at the just above the $75 mark for market prices. So the reason basically that this increased above the $70 mark was essentially the expectation by the market that prices were probably going to continue on the rise. Now, what I've done here is you can see I've marked on the price graph these different points. So in April 2022, the government published its first emissions reduction plan. And in June 2022, the auction cleared at a strong price of $76. Now we can see that the prices along the first part of this graph are pretty steady and pretty consistent. And then we can see at our point 3 here that the Climate Change Commission basically released its first set of recommendations to the government. Now, the Climate Change Commission was basically set about to kind of be an advisory body for the government. So it's a group of scientists and experts who are essentially advising across all aspects of the emissions trading scheme, including the price and unit settings that the government sets. So we can see that when the Climate Change Commission released its first set of advice, the price jumped massively to above $80. Now, the key reason for this was that the first piece of advice, or one of the pieces of advice that the Climate Change Commission came out with, was that the cost containment reserve price should be increased by a really significant amount for the following years. So for 2023, they essentially advised that the price the government should set for the cost containment reserve should be between $171 and $214. So that really, really set an expectation for the market of what prices were going to do. Now, the reason the Climate Change Commission's report is so important is because the government basically has to set a report saying why they haven't accepted the Climate Change Commission's advice. So the thought of the market was that they were probably going to accept the advice. Now we can see the September 2022 auction increased to $85. And then after this $85 mark, we can see quite a bit of volatility. Now there were some really key international factors here. So the Ukrainian war, that was a massive, massive factor internationally and on international commodity markets, including energy markets, as well as international carbon markets. And in Europe, for example, we saw the market price for carbon decrease significantly. And that was very much reflected in the New Zealand prices. Now, going ahead to the December 2022 auction, we can see that the price did drop quite a bit. It dropped by about $6 to $79, but it was still at very strong levels. Very, very shortly after this auction, the government kind of delivered its biggest clanger, so to speak. So what this was their confirmation of the price and unit settings for the auction for 2023. Now, what I think was very surprising to the market, judging by how high the price went versus how low the price went after this announcement, was basically that they set the price to just $80.64 as the cost containment reserve price. Now, this was lower than what prices had been trading at on the market, and it was obviously significantly lower than what the Climate Change Commission came out with in their recommendations. After this, we can see that prices started falling. Now, part of this, we should definitely note that there was very, very low traded volume. So although the prices were going down, there wasn't particularly significant volume going around here. So we can see this very, very significant steady drop all the way down to this 7.7 in my graph, which was the March 23 auction. Now, there was a lot of speculation in the market around what this price would be, given the cost containment reserve. Was it $80.64? And what actually happened in this auction is it just didn't clear. So there is something, there is a sort of confidential price set by the government, which basically means that the price in the auction needs to clear at similar levels to the prevailing market price. And what happened, obviously, was that this price wasn't within the bounds that the government set. The really important thing here is that we don't know what this price is. It is held confidential by the government. So anyway, no units were released in this auction. And two things could have happened here. Either the price could have gone up because there would have been an increase in demand for those who were trying to buy units in the auction and didn't buy units, or it would just continue falling because of this uncertainty. As we can see, the price did spike very, very slightly. And this was around the time, very, very shortly after the March 23 auction, that the government announced that it would be reviewing the emissions trading scheme. Now, Rowan will talk a little bit about this very, very shortly. But essentially, this was advice that was given by the Climate Change Commission back in their initial recommendations that they gave back in July last year. However, it did cause a very, very small spike in the price, but ultimately the price has continued falling. There was a bit of activity which indicated that people were either trying to take advantage of the lower prices, or they were trying to buy units that they needed for their surrender obligation. So these large emitters, they have to surrender their governments to the unit by the surrender deadline, which is the 31st of May this year. However, because the price kept dropping, this was more or less an indicator that that those wanting to sell were in greater numbers than those wanting to buy. Now, good reasons for why those wanting to sell were that interest rates are on the rise, as we know. So cash is king. People are wanting to liquidate their positions because of uncertainty and kind of just wanting to cut and run from the market, which is exactly what happens in other commodity markets or in other share markets that you see around the world. Now, most recently, which actually happened last week, the Climate Change Commission released its second set of recommendations to the government. Now, this set of recommendations very much stood strong to their previous recommendations, saying that the government did need to keep prices increasing if the emissions trading scheme is to be effective in meeting the emissions reduction plan. There is a webinar that the Climate Change Commission are hosting, which is on Thursday, which I believe you can sign up to. They are also recording this, so you can watch it if you're not available then. Anyone can tune in to this discussion, which I'm sure would be very interesting, talking about what their recommendations are. So it's very much a sort of crystal ball moment that we have now in terms of what's going to happen in the future. We can see a very clear trend that prices have been reducing. I cannot provide advice on what people should be selling their units at. So unfortunately, I can't give you any predictions on behalf of emsTradepoint as to what prices are going to do. However, what I will know is that you need to be very aware of kind of all these changing circumstances. It's always very useful to stay on top of what the Ministry for the Environment is announcing based on any consultations that they might have coming out and anything that they may be releasing in terms of their review on the emissions trading scheme, which will quite likely be some sort of consultation, as with the Climate Change Commission's recommendations as well. So it's very much a time will tell situation, and yeah, we'll just have to sit and wait and see what happens in the market. Over to you, Rowan.
Awesome. Thanks, Cathy. It's great to see this laid out and actually, especially why things happened at different times and how the market responds to those government announcements. Yeah, so I guess, yeah, as Cathy said, pay attention to those government announcements. They do seem to have a big influence. Along the lines of announcements, there are a few other announcements that we thought would be good to discuss at this webinar. So they're not exactly about the carbon market necessarily or emsTradepoint, but they are relevant for those who are participating in the ETS. So recently MPI has announced or has proposed new fees for the ETS. So this includes 22 new service fees. And just of note, there are fees they're proposing to introduce for permanent forests. So there's a new fee for registration of permanent forests, as well as adding areas of permanent forests. And these fees are quite substantial. And they're also tiered based on the area. But for example, for an area of 10 to 50 hectares, both of the fee for registration and adding areas is about $1,800. So that's a significant jump from it's zero right now. There also are several fees related to registering areas over 100 hectares. So this has to do with something called the Field Measurement Approach, or FMA. But again, something to consider there. And finally, MPI is proposing an annual charge for all ETS participants around $30 a hectare. And these fees are proposed to be effective from the 1st of October. So that's coming up pretty quickly. There is a consultation out now. CarbonCrop is making a submission, but anyone is welcome to make a submission. So I do recommend that. But the other thing is that what this all means for you is that if you're not registered in the ETS, but you're thinking about it, now is the time to do it. So if you register now, you will avoid those fees for permanent forests. So if you're registering for a permanent forest, you won't necessarily avoid the annual charge if that comes into effect, but basically now is the time to register or to add new areas of permanent forest as well. The other recent announcement, as Cathy mentioned, is that the government announced that it's reviewing the ETS. So this is, again, what the Climate Change Commission has recommended, but the review is primarily looking at how the ETS can better drive emissions reductions. So that's really more on the reduction side of the ETS, but there is a component of that review that's supposed to be looking at how to improve incentives for native plantings. And we really did want to reiterate that just because there's a review of the ETS doesn't mean that you need to panic. It's actually hopefully going to be a positive thing, especially for native forests. And the government has committed again to using the ETS as one of its primary tools for climate change response. And it also has reiterated that it's important that the ETS is seen as stable as well. So we are hoping that this could hopefully stabilize prices in some way. The other thing I wanted to point out is that, and this is purely speculation, is not advice, and this is my opinion, is that reading between the lines, it does seem that there could potentially be some limits placed on exotic forests in the ETS, so possibly limited access to the full price of carbon, for example. This is really just speculating on, there is a part of cabinet papers that were released as part of this announcement on the review. It looks like the government is looking at the risks of how the ETS is driving exotic plantings. And it looks like they're trying to weigh up how to incentivize planting natives, but not necessarily exotics. And so it might mean that they're looking at treating native and exotic forests differently potentially. But again, this is speculation. And really what it means is that if you are thinking about registering exotic permanent forests, now is the time to do that. So there will be this review and there'll probably be some consultation after the review is released, but now is a good time to get things registered. And finally, if you have been on one of our webinars before, you've probably heard us mention this, but now is the time for emissions returns. These are mandatory emissions returns. So if you're registered in the ETS and you are registered as of the 31st of December last year, you have to file an emissions return. If you are a customer of CarbonCrop, you don't need to worry. We are taking care of this for you. But if you are registered, but you're not a customer of CarbonCrop and you're not too sure what's involved with filing your emissions returns, or this sounds like a bit of a scary thing, just get in touch with us. We're happy to take a look and see what we can do to help. Okay, and if you're looking for more information, we have a blog on our CarbonCrop website. You're welcome to start there, especially if you're just at the beginning of your carbon journey. Also, if you are interested in emsTradepoint and what they do, there's their website on the screen. Welcome to look into that.